Good day, traders. I trust you are well. Welcome to Price Action Profits from the Asian Open. The goal is to look at some of the best price action setups during the Asian morning session, and that's how I define it. GMT or Singapore time or Central African time, where I am, that first 4 hour slot. The markets on our watch list, those four markets, Nikkei 225, Hang Seng 50, New Zealand yen, Aussie, and of course, you can look at all the markets. I'm just choosing to focus on these markets, and I'm just picking some of the best price action setups, so not the only price action setups. Let's have a look at Hang Seng 50. Now, this was the first candle, the opening of the Hong Kong Hang Seng 50. First candle, bulls controlled the first candle, but we had a weak signal, weak buy signal. And the reason I say it's weak is that the first candle, tail on top, if you're looking to buy, is always a consideration, because that means at some point it was a full bull candle, but bears bought and we closed there. So there are bears that are active in the market. Had our first candle being like that structural small tail at the top, then I would have been saying, well, because you trade the open, you can just buy above that candle, depending on the structure. Look to the left, but that's the open. So you could, if that was the first candle, you just buy on there and decide where to put your stop. And there's always two places to put your stop, either a stop beneath the candle or you use a measured move, because we're at the open. And if it was way down into the market, an hour or so later, you look at any other levels of support and resistance that you got to have. So you got to have clarity that you're trading the open. This is where you can put your stop. In any case, we had a problem there, so best to wait. Second candle controlled by the bulls. Now, this first candle was a trading range, so we are still within the trading range, but bulls are controlling the market. So first, that's fantastic. Third candle, bulls break out above the trading range. Now we have two options to trade. You can trade the breakout trade. You always have an option where there's a breakout trade. The breakout trade, breaking out about a trading range and understanding that any breakout is likely to fail. And you got to decide where to put a stop. I would never put my stop here. Just back at the top of the trading range. Either put your stop at the bottom of the trading range or, still use a wider stop. Or you wait for the breakout pullback trade if you want a higher probability. If you're taking a breakout trade, lower probability, but the market can go far and you make a lot more money than waiting for the pullback. The pullback might, also give you an opportunity to make decent money depending how it's structured. So if you took that trade and you saw the failed breakout, we still had the open bear high test. Bulls went up and they failed, immediately. Failed breakout by the bulls. If you took a breakout trade and you saw that, best to get out. And if you put a proper stop, you're not going to lose a lot of money, but you are in the market trading weight. Now, chances are we might go back into the trading range. We end up with a trading range open right up to this point. Now, if the bears break out beneath the trading range, they want to get to a measured move. There is the height of the trading range. There is the measured move. They want to get to a measured move. And that's the goal. So we get the breakout by the bears, bear breakout below the trading range. Bears are expecting to get the measured move. You got to take a trade if you trade in the open. That's a decent enough breakout. And again, options. Take the breakout trade or wait for a breakout pullback. So if you take that trade, just like, and I said, if you take that trade, I wouldn't put my stop here. I also wouldn't put my stop here. If you look at the measured move of that, that's probably the best place to, not the best place. That's a tighter stop to put in. You could still put a stop up here. That's fantastic. Because trading a breakout, you expect the market to get to here. If it does get to here, you're going to get 1-to-1. So that's a conservative stop. Pretty wise to do that. Or if you like to trade tight stops, that's a place to put a tight stop. So you take a breakout trade or you wait for the breakout pullback. We have a pretty weak breakout here, but we get a pullback back to the moving average. And that's a decent enough candle, but because of the weak breakout, you have two options to trade. Either take that breakout, and again, I would use a measured move stop, maybe somewhere up here. That's a decent stop to trade if you want to be more conservative, still up there. Or you wait just for confirmation. There's confirmation of the pullback, which also happens to be a breakout beneath that trading range. So you take that, and then we get into the close, of the Hang Seng. If you trade in the open, you have choices. You think we might get to that measured move, but we come into the close, take my profits, or just hold on to my stop, maybe at that lower high, and see what happens in the open, and maybe we might get acceleration. So quite a lot of things to consider in here, and I think that's a fantastic thing about trading. One part of it is get all the knowledge that you can get, and then the other part is got to apply the knowledge. The only way to apply the knowledge is to get into the market, because the market then just throws absolutely everything you've learned into one pot and produces patterns for you to consider trading. Another setup, different kind of structure, but interesting. Now this is New Zealand yen. Open of the Tokyo Exchange, Doji, trading range, price action. We're still in a trading range from the earlier price actions, but that's the open, you can see that. So, you're not going to do anything, you are in a trading range. As we break out above the trading range, you have options to trade the breakout trade. Might have been triggered there, I'm not sure. So that's an option you could have taken. You can take a trade there. And if you're taking a trade there, stop probably, at the bottom of that, or do a measured move stop. It's still in the open, so who knows? It might go far, or it might come back. Alternatively, wait for the breakout pullback. There is a breakout, there is a pullback, pretty tight pattern. You may want to let this go, but if you want to take that, that's is a breakout pullback, low test, fantastic, not an outside candle. You could take that, but there's no way to put your stop there, above the trading range. Your stop has to be below the trading range or a measured move. And then something begins to happen here, which you need to pay attention to. We don't get just beautiful bull breakouts and pullbacks and nice candles. We're breaking out of a trading range. The trading range behavior is carrying on as this is unfolding in front of you. Breakouts not triggered above there. Pullback, another breakout. You could have been triggered above there. Market is going up. Tight trading range behavior. Bulls are strong enough to keep going. Bears are strong enough to try and fail it, but bulls are much stronger. So we are carrying on the trading range behavior. This trading range that we have is now slanted upwards, but you got to find ways to trade and just use the appropriate stop. So you could have taken that trade. They're all breakout trades, which means, you need a pretty reasonable stop. As the market goes further, you can use that as a stop level. And you see the trading range behavior continues. Bears tried to make it fail. Bulls break out. You could have gone above that. That is a decent enough breakout above the trading range. And here I'm showing the example of using a measured move stop. You can put a measured move stop here. That is more conservative. That's what I personally prefer. But you can also put a stop here just below the trading range. You're taking that trade, you can put a stop above. You can put a stop just below or a measured move. So you could have done that. Breakout, pull back, bears try to fail, but they don't get beneath the EMA. Another breakout trade you could have taken. That will break out above the trade. Much later on, the trading range behavior is carrying on. Another breakout is getting a bit late in terms of that morning session that we were speaking about much earlier on, probably coming to the end somewhere within here. So if you're taking that, you must be aware of the timing, manage your trade tightly. It begins to fail, you can get out. All right, traders, just a couple of best trade setups from the Asian Open. And I think you might have picked up from my video last week that, this price action profits has shifted, from just looking at best trades during the day. I'm focusing on some best setups on the Asian Open, and we're going to carry on this process all the way through to the December event, and then decide how this particular show progresses thereafter. I trust you enjoyed it, and you glean some stuff